We're going to talk about insurance on this segment of the Gig Geezer. If this is your first time checking out the Gig Geezer, if you're a returning visitor of the Gig Geezer, hey, thanks for coming by. And if you would not mind, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. Before I get going, I want to acknowledge a couple of subscribers here on the Gig Geezer channel. The first one, and I'm going in reverse order, is a gentleman out of Charleston. At least I met him in the Charleston, South Carolina area, but I think he lives closer to, if I want to say, the Somerton slash Manning slash Sumter area, which is more central southeast South Carolina. And his name is Mr. B.O. Butler. I met Mr. Butler a couple of months ago in Charleston, and we hit it off. And I happened to have a phone conversation with him last night and talked strategy and just life in general. And I wanted to acknowledge Mr. Butler. The other person I wanted to acknowledge is a young guy by the name of Maurice. Maurice, actually, here I was in the parking lot of a Fresh Market doing an Instacart order. And I just closed my van door, about to go around and get into my van. And the guy goes, "Inwood Lane, man, I be checking out your channel. Man, I appreciate what you've been doing." And I told him I was speechless. I mean, he made my day. I told him that he made my day. Just the mere fact that someone recognized me and said, "Man, I'm checking out your stuff, and your stuff really is helping me out." That means a lot. That really means a lot, because it tells me that what I'm doing is not in vain. Moving forward, I want to also do some more house cleaning here, in that I want to share expenses, at least over the last couple of months. The last time I shared expenses was in this particular segment of the Gig Geezer, and what I did, and what I noticed is that my numbers were higher in terms of expenses, because I counted certain things, and I may have mentioned this in the past too, that I'm probably a little harder on myself with certain expenses, and I realized that there are a couple of items that I really shouldn't be counting, and so that kind of brings my numbers down, and it makes a difference. But anyway, in the month of May, a revised set of numbers for the month of May, I drove 5,760 miles for the entire month. My expenses in May were $4,247. My costs per mile based on expenses were 73.7 cents a mile. My income, van-only income, van-related income for May was $7,686, and I earned about $1.33 a mile. That meant I had a net profit of 60 cents a mile. Now, I've shared in the past that what I'd like to get to is about $1 per mile. So that means either I got to have a better rein on my expenses, and it also means that I got to earn more money. So in the month of June, for the entire month of June, I drove 6,480 miles. My expenses in the month of June were $5,078. My cost per mile was 78.3 cents a mile, and I earned van-only or van-related income of $8,861. That translated into $1.36 a mile, and a profit of about 58 cents a mile. So it looks like I'm spending more, and there's a reason why those numbers are slightly less, and I'll share that very shortly. So far in the month of July, today is July 14th, 2023. It's a Friday. These numbers are through yesterday, Thursday, July 13th, 2023. These are just partial numbers. But so far, I've driven 2,410 miles. My expenses are so far $1,563. That means an average cost per mile is 64.8 cents. So far, income, van-only, van-related earnings of $3,936, or $1.63 a mile. My profit thus far this month, that's going to change though, is 98 cents a mile, which is more like what I'm trying to achieve. So overall, without doing any final numbers crunching, it's safe to say that my numbers have remained rather consistent, in that my average earnings per mile is somewhere around $1.40 a mile, and my expenses per mile is somewhere in that 80 cent a mile range. So the expenses are coming down. The income has somewhat remained constant. But a further breakdown of my expenses, and I shared this, and again, in this particular segment of Gig Geezer, I shared my top 2 or 3 outlays each month. And the first one, the biggest outlay each month, is always going to be my commercial insurance. Now, and that's gonna segue into what we're talking about. My insurance each month is $1,520. That is for 2 drivers. So that's going to translate for June and for also June numbers as well. My second largest expense is gas. In the month of May, it was $1,259. In the month of June, it was $1,467. My third biggest outlay in the month of May was office rent. Now, I've shared in a past segment of Gig Geezer over a year ago where I showed at least my starting out that segment visiting my office to check for mail. I'm also a licensed insurance agent, and I have an actual agency, and I have to maintain a brick and mortar place. And so my office serves dual purpose also as the headquarters for my transport operations as well, which includes this Sprinter / cargo van. So my my top 3 expenses came out to $3,074, or about just under 55% of all my entire outlay for the month of May. In June, the numbers are a little different. Now, I mentioned after insurance, gas was $1,467, and my third highest outlay were for tires last month and alignment, and that came up to $755, or $3,742, or about 73% of all my expenses. Actually, just under 75% of all my expenses. And July remains to be calculated because we're only about halfway into the month. Now, by the way, if you like the content that's been provided in this segment of the Gig Geezer and any other segment of Gig Geezer, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. Now, for some of you, this may be a review of an old topic, or this may be a review of maybe an introduction to a new topic. But hopefully this may be of some benefit and of useful information that can help save you from entering into a very bad financial situation. Now, before I go any further into this segment about insurance, I want to share again that I am a licensed insurance agent. I've been licensed, at least my first licensing was was established in April 2001, and that was for life, accident, and health. And then my second licensing occurred in January 2014 in property and casualty. And property and casualty is what's the main discussion of insurance when you're talking about commercial insurance. Now, I also set up operating my own agency officially in property and casualty in June 2016, and I've maintained an office, as I've already established. I've maintained an office since February 2017. Now, why am I saying all that? Is because I'm talking with some qualified knowledge, but I'm also making this disclaimer in that I am licensed in the state of South Carolina, and so my knowledge with the intricate parts of insurance are based on the state of South Carolina. And also, each state is going to have different minimum requirements. Each state is going to have certain nuances with state regulations. Insurance costs and premiums vary from person to person, from vehicle to vehicle, and from state to state. And so when I tried to explain this to someone who commented on my page a few months ago, person really ripped into me saying, man, you're getting ripped off with your insurance and all that stuff. You don't know my situation, why I'm paying what I'm paying. And this guy went on to say how I'm in Chicago and I'm my insurance and I got similar insurance like yours and mine is only this much a month. Well, that's because you're in Chicago. Your situation is different from mine. So I have to say this disclaimer. The other thing is that this is just for information purposes only. This is not actual insurance advice. If you need actual advice, I recommend that you contact a local agent who is licensed in your state and can give you the lowdown nitty-gritty for your situation and your situation only. Now, I know I've talked 10 minutes into this segment of the Gig Geezer, And by the way, if you like the content that's been provided in this segment of the Gig Geezer and any other segment of Gig Geezer, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. And I thank you if you've stayed with me thus far. And so I'm going to try to get through this as fast as possible, but also explain things in a way that hopefully it will be of use and benefit to you. Now, at a minimum, what I'm getting at is that all gig apps that we work, and if you also do over-the-road work, all of these entities are going to require that we maintain certain levels of insurance. Most gig apps is going to require that you maintain at least the state minimum liability for insurance. Some will go as far as to say that you need to show us proof of your insurance. Some will require that you show a photocopy of your ID card, and some may require that you send a photocopy of your declarations page. And your declarations page is the one that describes your vehicles, and it's all going to list the drivers on the policy, and it's also going to list the actual coverages. And some places require all that information. But what can be established is that the overwhelming number of vehicles that are used in gig economy work are personal vehicles. So that is the cars, that is your SUVs, that is your family vans, and your light pickup trucks. And so most people who operate these vehicles, including myself, use a personal auto insurance policy. That is different from a commercial insurance policy. A commercial insurance policy is basically for commercial vehicles, but also in the fact that when you are using your vehicle to make money. Now, I'll get farther into that also with this particular segment of the Gig Geezer. Now, the best example that was given to me in terms of what we do is like the old cab drivers. And the old cab drivers used to operate from the standpoint of they were radio dispatched an address for pickup. And when they acknowledged that address, they turned on the light and became on duty. Once they completed that trip and dropped off the rider and collected the money, then they can flip off that switch and say that they're off duty. So you're on duty when you turn on that app and you're looking for opportunity, and you're off duty when you've turned off that app and you're no longer looking for opportunities. Now, based on that example, that means most personal auto insurance policies don't cover that. In fact, if you or I were in a claim situation and you or I were at fault and we don't have the right kind of coverage, it is very much likely that you and I would be held liable for all of that. And the insurance company would even go as far as if they found out that we were doing something for pay without the right coverage, or if it goes against the verbiage of the policy, you and I would have our policy rescinded basically on the spot, and the company would refuse to pay any of your stuff. They may pay for the other party, but it's possible that we will be on the hook to even pay for the other party. That's an overview of what can happen when you and I are out here using our personal vehicles to do this gig economy type work, being it's rideshare, Uber and Lyft, or if it's gig food delivery stuff like DoorDash, Grubhub, Uber Eats, Instacart, or even the last mile stuff, be it Roadie, Curry, Dispatch, Freight, any of those out there. Do any of these gig app companies explain this to us? No. Do any of these gig app companies explain what type of coverage we need to get? No. And by and large, their language is by and large, if you actually look at under driver requirements, their language pretty much says we are responsible for maintaining insurance and getting the right kind of insurance for the stuff that we're doing. That's what many of them do. The reason being is that they don't want to be held on the hook for giving advice that can come back, that someone can come back and sue them for. So that's why they're very vague about things. Now, what are some reasons why many of us are guilty of not having the right kind of coverage? One reason is that some of us are more than aware that it costs more to have the right kind of coverage. And therefore, sometimes in many situations, we can't afford to pay that extra cost, or we're not willing to pay that extra cost. And then again, some of us simply don't know or didn't know. Another reason is that some of us have found out the hard way, meaning that they have been in that situation where it was a claim situation, they were held the liable party, and then found out when the company rescinded their policy. Okay, that's I'll just leave it at that. Now, some of us also may say that, hey, we're just doing this for part-time. We're just doing this for spare change, man. And so I'm just doing this for extra money. So why do I need it? Well, again, I'm not telling you what type of insurance. I'm not telling you based on advice what to get. I'm just going to present to you information in this particular segment of the Gig Geezer. Now, when you're in certain situations, what I can tell you from insurance agent experience, when you establish coverage for a company, typically when you get when you have a new policy that's bound using insurance agent term, some companies do an audit, and the audit is that they will call you and basically ask you every question that you answered on the policy application. And so one of the questions may be, do you do rideshare? Do you do DoorDash, Grubhub, or Uber Eats? And if you answer that question, depending on the company, they may rescind your policy right there on the spot. Or they may, depending on if they're able to do it, they may rate you. They may reclassify you and tell you that you must maintain this type of coverage if you want us to pay in any claim situation. Another time when there's an audit is in the actual claim, and they will ask you certain questions. Were you doing this when this occurred? Were you doing that when this occurred? And if you answer yay to the wrong questions, they may rescind your policy right there on the spot as well. This is what I mean by some people finding out the hard way. Another question may be asked, do these companies actually offer some type of coverage that may protect the driver in the event that when a driver is doing business on behalf of that company? And the answer to that is both yes and no. Now, what I mean is that some companies do, some companies don't, and those that do, it's limited in that it is for a specific situation. So that it's never intended to replace the coverage that you may have already purchased. Now, going back to my rideshare days, it used to be that Uber and Lyft only covered their insurance actually kicked in, that they offered only kicked in when you had a rider in your vehicle, and you have a rider that's in your vehicle and you're going to that drop-off destination. That's the way it used to be when I started in September 2016. But the coverage that they offer has evolved over time. One step was that it started to cover one of the additions that they made was that they started to provide a limited coverage once you have accepted the ride request and you were traveling en route to the pickup, and that was a limited coverage. But that the large amount that they covered was when you had a rider in your vehicle. Now, they have since also evolved to where they cover from the moment that you turn on the app, but it's also limited. Now, how is that spelled out? Now, I don't want to bore you with all the specifics though, but there are 3 phases that they cover you, at least when you're doing rideshare. The first one is called phase 1, when you have turned on the app and you're driving around looking for opportunities. And what they say is that they provide third-party liability coverage if your personal auto insurance doesn't apply. Now, those are key words there. If your personal auto insurance don't apply, that means that if more than likely your personal auto insurance has denied coverage. Okay, so basically you're in limbo there. They denied the claim. I'm sorry, they denied the claim, and there's a possibility subsequently they're going to deny your coverage or rescind your coverage. So then you have to provide them a copy of that claim denial letter. Now, they may offer what Uber and Lyft offers in that phase 1 is $50,000 for bodily injury for one person, and then $100,000 bodily injury for all parties. The entire amount that it's going to pay for bodily injury is $100,000 for all the people. But if it's for one person, the most it's going to pay is $50,000. And then it's going to pay $25,000 in property damage. So that means that if you did damage to somebody else's vehicle, you ran into a light post or you ran into a building, the most the policy is going to pay is $25,000. And that's for that first phase. The second phase and the third phase, it says then the second phase is going to be when you've accepted an offer, a ride offer, and you're traveling to the person. And then the third phase being that you've picked up the person, you're traveling to that drop-off situation. They say that they'll provide $1 million third-party liability coverage. And then they provide uninsured and underinsured motorist coverage, and then contingent, comprehensive, and collision coverage up to actual cash value of your vehicle with a $1,000 deductible. Meaning that they will actually pay if your vehicle gets damaged and or totaled. And well, anyway, if your vehicles get damaged and or totaled, after you pay a $1,000 deductible, it may pay up to the cash value of the vehicle. Meaning that whatever the value of your vehicle is at that time, market value of the vehicle is at that time, it will pay up to that amount. So now the key terms are third-party coverage. That is if a driver hits another vehicle. So that means if you hit another vehicle, it provides coverage to the other person's vehicle, but it doesn't provide coverage to your vehicle. Now, you are still responsible for your own vehicle in that situation. You are still on the hook for your vehicle, even if your personal vehicle coverage doesn't cover the damages while doing rideshare or other recognized apps. In other words, third-party coverage is if you hit the other vehicle, okay, you damage the other vehicle and you're at fault, that's when that coverage kicks in. You are still on the hook for your own vehicle in phase 1. Phases 2 and 3, continued coverage means that it is based on whether you carry comprehensive and collision. Comprehensive is like if a tree falls on your vehicle, or if lightning strikes your vehicle and blows it up. Comprehensive may be like if a big boulder from a vehicle while you're driving on the freeway dents your hood, takes out your windshield, and dents the top of your vehicle. That's all a part of comprehensive. Collision is if you hit something, you collide. That's what collision means. But you have to maintain full coverage, comprehensive and collision, and for that to kick in. So that means that if you don't want to file that claim with your insurance carrier, this is when Uber and Lyft kicks in. Now, I know I've spent a lot of time with that, but this is the basis for all the other, this is the basis of understanding for the other gig apps. Now, the question is, will they pay? That's the other question. So you can take a chance on filing it through them. You may have to pay a $1,000 deductible if it's Uber, or $2,500 if it's Lyft. Now, I set up all that information to present information that, again, that is already known or maybe new to others. Some insurance companies may provide a rideshare endorsement. The rideshare endorsement is going to also involve gig stuff like DoorDash, Grubhub, Uber Eats, and Instacart. An endorsement on insurance terms is basically an addendum to a policy, meaning that if you do this type of work, we have spelled out what we will cover in your policy. And the coverage also varies from carrier to carrier or company to company and from state to state, because they have to be in compliance with state laws. And so some of the known companies that offer this rideshare endorsement are Allstate, Farmers, Liberty Mutual, Progressive, State Farm, and USAA. Personally, on one of my vehicles, my F-150, I do have rideshare endorsement because my vehicle, based on what I shared with them, is used for business purposes. And so what I did also was to give myself some peace of mind when I use the F-150 to do what I have done in the past. I got the rideshare endorsement. So the question is, what about some of the other apps? What do they do? Does DoorDash provide then third-party liability insurance. This is based on their website. They say that they provide excess auto liability insurance, but this insurance only applies to accidents that occur while you're on an active delivery, meaning that once you have accepted the order and you've gone to the restaurant and you're en route to dropping it off, that's when it may cover. But that's excess, meaning that basically if your coverage don't, whatever your personal auto insurance don't cover, then theirs may kick in. So they define what's considered active delivery. I've pretty much defined that. Additionally, for coverage to apply, both of the conditions also have to be met, according to DoorDash. DoorDash drivers are considered the liable party for damages or injuries to another party while on an active delivery. So you're on the hook at all times. DoorDash driver's personal auto insurance policy has been denied. Your insurance company has denied the claim and provided you with a coverage denial letter. And what may also come after that is a rescission of coverage letter as well. That's the problem when you go around. You may not be when you're not with the right insurance company, or you've not gotten that endorsement. If you're going around with the wrong coverage, you're in the wrong. You're going to be out of luck. What's another company? Freight. According to Freight, with their verbiage, they say driver shall maintain at its own expense insurance policies with the following minimum coverage and limits. Automobile liability per the following schedule for any vehicle used by driver to provide services under any delivery agreement, and naming driver as operator of the vehicle. Meaning that if your vehicle is under 10,000 pounds of gross vehicle weight, you must maintain at a minimum state minimum limits or state minimum liability. If it's from 10,000 to 20,000 pounds gross vehicle weight, you must maintain $300,000 combined single limit coverage. From 20,001 pounds to 26,000 pounds, we're talking about like box trucks here, just like the 10,000 pound level, a $500,000 combined single limit. Freight goes on to say that you understand you will be exclusively liable for all injuries or damages that result from your failure to comply with these obligations. Meaning that Freight doesn't provide any contingent coverage. It's all on you. It's all on you. Curry. Now I'm going to speak from the carrier perspective because that's the side that I'm on, but I would venture to say that on the driver's side, you must maintain state minimum coverage with them. On the carrier side, you must have commercial auto insurance. You must have a minimum of $300,000 liability for vehicles under 10,000 pounds and $750,000 minimum for vehicles over 10,000 pounds. Additionally, you must carry $100,000 cargo insurance. So basically, you must maintain you must have commercial insurance to do the carrier side. But Curry does not offer any insurance. It's all on the driver. Point pickup. What they say is you own or have the legal right to operate the vehicle. You intend to use or do actual use for jobs or vehicle and maintain all legally mandated registrations and insurances for such vehicle. So in the event of any claim, you will be solely responsible for reporting that accident in compliance with applicable law and your insurance policy. You are solely responsible for any and all liability that results from or is alleged as a result of the operation of the vehicle you use during a job, including but not limited to personal injuries, death, and property and damage. Again, this is what a lot of them are saying. It's very similar stuff. It's all on us. It's all on us. So it is important. It is important to have the right insurance coverage and be with the right carrier. Roadie, place that I've been on since October 2018. Roadie says in bold print, bold font, Roadie is a logistics management platform and does not provide delivery or transportation services. Roadie is not a motor carrier. Then it goes on to say, insurance coverage related to your use of the Roadie app and the performance of the gigs you choose to perform, including without limitation automobile liability insurance, workers' compensation insurance, occupational hazard insurance, and health insurance coverage. You acknowledge that the standard automobile liability insurance may not provide you coverage while performing a gig or while logged into the Roadie app. You're responsible for consulting your insurers to ensure that you have insurance that covers your performance of a gig and your use of the Roadie app before you offer to perform a gig. At least Roadie says that, hey, make sure that you got your shit right. You got your shit straight, because it ain't on us. GoShare basically says the same thing, but they tell you to make sure that you consult with your insurance agent. So the question is, what are our options? And by the way, if you like the content that's been provided in this segment of Gig Geezer and any other segment of Gig Geezer, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. So what are our options? Should we purchase rideshare coverage from our personal auto insurance company? Should we switch to a company that offers rideshare coverage, or should we buy commercial insurance? Now, that's based on your personal situation and where you live. Some states may not even allow for rideshare endorsements, and so you must get commercial insurance. In my case, because I got this van, I got commercial insurance, because also I have done stuff for brokers and shippers, and they require a certain level of coverage based on Federal Motor Carrier Safety Administration. So I will say this: I don't worry about things in this van because I know that I'm covered. Same thing with the F-150 with that rideshare endorsement. I don't worry about things like I did maybe back in 2018 and 2017 when I was going around acting on my very best behavior, hoping that nothing didn't happen. So take what I say for information and information only. This is not actual advice. This is for information purposes, and hopefully this will help you govern yourself to put yourself in the right situation so that you will not be on the hook if you're ever held liable. And with that, this is yet another segment of the Gig Geezer. If you like the content that's provided in this segment or any other segment, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. I'm in Wood Lane, and as always, may your grind and may your hustle continue.